So low interest rates over the past decade have led to a boom of premium finance business. There's people making literally millions of dollars selling premium finance cases, and we're running into situations where premium finance deals are running into trouble because the way that they were underwritten required certain amounts of the policy, certain percentages of the policy to be funded by borrowed money. And now the cost of that money is going up, and that is potentially leading into problems. And if the market environment doesn't turn around quickly, it can lead to more problems. Things are starting to unwind. Nothing is catastrophic yet, but in this video, I interview Bobby Samuelson, and we talk about what this could look like, right? Like, what is he seeing in the market environment right now? What is happening? What does the next 2 to 3 years potentially look like if things don't change? What are premium finance companies looking for, right? Like, what are they hoping for? And then we also kind of touch on at the end something that I think is really important, which is some of these people, marketers, I'll call them, who are out there on TikTok and YouTube and Instagram, and they're selling this idea of utilizing borrowing from the policy to then create positive arbitrage and put it back into the policy, and what we would call hyperfunding. I'm not gonna name names of companies and get into it, but anybody who's watching this that knows what I'm talking about, you know who I'm mentioning and referring to. But here's what I'll say. When you look at this, the regulatory updates and the interest rate environment changes are gonna have a catastrophic impact on those policy performances as well. And it's actually going to have an impact on how you're able to illustrate those once the new regulatory changes come into play. So let's get into it. And if you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video, and we'll see you in there. So now this is going to be a pretty hot topic. We're running into this a lot. How do you see, what are you seeing in the world of the premium finance space, and how are the increasing interest rate environments and the loan costs and everything that go along with, like, what a lot of people have done with premium finance deals and what they're currently doing. Like, so what are you seeing just in the premium finance market in general?
I'm seeing right now, although this is starting to spool up, is I'm seeing sort of what I call subprime premium financing coming under pressure. Okay. We've seen lawsuits, we've seen carriers pull back, we've seen all kinds of crazy stuff happen. What I would define as subprime is the existence of sort of two factors, maybe three factors. The existence of absurd promises at point of sale. So things like, this product will be free, or you will get X amount of income for life and never have to pay anything for, it's like the more, so very absurd promises.
Yep.
That's kind of one factor. Second factor is no capacity or willingness to pay out of pocket or post collateral. All right. So if you put those two things together, that's what I would call subprime. And the third is a situation where that policy has been enforced long enough for the loan to be big enough that a big loan rate really matters. Yep. So you kind of have like 7 to 8 year old policies, again, sold as free insurance to clients who are probably not financially capable of actually posting collateral, paying interest.
Yep.
Those deals are really coming under a lot of pressure. But those three factors really need to be present. And if those three factors are not present, I'm not seeing a lot of big impact right now. Although I'll say every day I feel like I'm hearing more and more and more. In fact, I got a call a little while ago about a deal going south because of higher interest rates. So the subprime world to me is kind of 3 of 3. Okay. The one step up from that is maybe 2 of 3, and I'm seeing increasing evidence that those 2 of 3 type cases are coming under pressure. Okay. So it's like a securitized loan tranche, right? Like you've got the AAA stuff and you've got the toxic sludge, and the toxic sludge premium financing deals can't handle any strain. They're blowing up. And then it's, the problems are slowly working their way up the stack. And the longer rates stay high, and rates are very high for lending, 5% or whatever for 12 months over, the longer rates stay high. And if we get another 0 this year in the market, then that's going to be a problem. So that's going to be that I think, we will have to wait and see a little bit on premium financing. But I'll say this too, and I talked to a lot of premium financing folks, and there is a little bit of an assumption that, hey, if we just kind of try to ride this out for a couple of years, things are going to go back to normal.
It'll get back.
Yeah. And we'll see. I hope they're right. But there's a
Yep.
good chance they're wrong. And if they're wrong and they haven't been talking to clients about it and clients are getting collateral calls and they don't know what's going on, it's going to be a real problem.
Yeah, I mean the question, yeah, like how long and what's the burn look like to be able to get there, and
Yeah.
yeah, it could be ugly. So last thing, because it's kind of on the premium finance side, but it's not really. It's like there are some people that have, like kind of like utilize the IULs. Because is it fair to say that most premium finance deals this day and age are utilizing IULs?
Yeah.
Most.
Yeah.
Yeah,
Yeah.
I mean,
70%. Yeah, probably.
yeah, exactly. So there's some people that are utilizing like kind of like self premium finance, like saying, hey, put your money in a policy, you can borrow against it, get positive arbitrage in the policy, get more insurance with that policy. And they're basically like utilizing the cash inside of the policy to do is the regulatory updates with AG 49B, so to speak, or like the updates to AG 49, is that going to have any impact on those kind of tactics and the illustrative ability with it?
Yeah, it'll tighten down the illustrated arbitrage. So those won't work the same. I mean, you may be able to get something out of it, but it's not going to work as
It's
powerfully
not
as it does. Yeah.
not looking as sexy. Okay.
You're talking about hyperfunding, where people are borrowing money from the policy and putting it back in as premium?
Yeah.
Okay, this has been going on since like 2005, and there have been all sorts of problems with these policies, and they blow up. Why people do this is like absolutely beyond me. But it still persists and it still exists, and I mean, it's just it's crazy to me.
It's nuts, but people are doing it, and it's like there's a couple people that have like popularized marketing tactics around doing it, and it's just like, it's gotten really popular. And to me, it's super dangerous. It's like one of the most certain ways that you can take an IUL that has the potential of doing some good and making it almost nuclear as far as catastrophe goes for your
It
personal
is exceedingly risky.
Yeah.
It's exceedingly risky. Yeah.
All right. Well, cool. Well, man, thank you for your time. We went a little longer than we thought we'd go. But guys, if you haven't, I know I started it. I'm going to end with it. Go to lifeproductreview.com and sign up. It'll be the best thing you do for your business. I you know what I've been doing, Bobby, recently too? People that call me and they're like, I'm doing all this IUL stuff. I'm thinking about getting an IUL. I'm like, listen, if you're going to put $20,000, $30,000, $40,000 a year into an IUL, go to Life Product Review, spend $99 and do your own. Like you're about to put your livelihood into this. You as a consumer, go learn about this before you do it, because you should never put your money into anything you don't understand. So if you're an agent and you're selling IUL, I encourage you to go like at least learn about what you're selling, so in good faith you can sell it and know what you're selling, right? If you're a consumer, go check it out, because you should never put your money into anything you don't understand. And there's not another resource on the planet that's going to give you a better breakdown than Life Product Review will. So, all right. So what's up, Cashflow Hacker? So as you can see, increasing interest rates are having an impact on the way the premium finance market is functioning as a whole, right? Other dominoes are gonna fall as we move forward here into 2023, as regulatory updates actually get implemented, as we see like at the end of the day, nobody knows what direction interest rates are going to go. If they keep increasing, it's actually going to cause a lot more pressure and a lot more stresses in a lot of areas on the insurance companies, the way their loan costs are going to come into play, all these different moving parts. So it's important that you understand. This is why I do these videos, because it's important to understand, not just to look at an illustration and to like think of these products that are being sold as very simplistic, safe products, when in fact they're very complicated, complex financial vehicles that, most people just don't understand what they're buying. And that's why it's important that you understand truly what you're getting involved with. That's why I make these videos. So if you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video. Hopefully you found value in this one. Until next time, have a blessed, inspirational day. We'll talk soon. See ya.